New day open. Right there. We opened here, ES. We traded down to this monthly weekly low at 65.40. I mentioned that was a level I'd be interested in getting into a long position. We also took out the low of October. I think we took it out in New York. Low of that Friday on October 10th it was, where we just fell out of bed, kind of like we did today. Took out that low. I did get involved in a trade here and made a little bit. I got involved right here, and I made a little bit of money. I was just in and out because I was scared to death. Been trading real scared. That's why I'm trading ES, because when ES pulls back, it's not nearly as vicious as when NQ pulls back. NQ is pulling back 20, 30, 40 points on a candle, 1 minute candle. Like this right here, this was a 50-point pullback. 50 points pullback. Nice run up. So that fair value gap I had highlighted over here as we were, it's not the first one, I don't think. No, there was multiple, but that's the one that the price reacted to when we went through it. And so we went up, almost made it to the high of this new week opening gap. I mean, this is actually a fair value gap on the weekly chart right there. And we almost made it there, triple tapped the high. But then we came back down, wicked into that same fair value gap and settlement and the new day open. Look at all those candles. Candle bodies are respecting that new day open price. And so I got in another long, but I got in it over here. There would be more money here, but these pullbacks are freaking nuts. So I decided I was just going to trade ES, and I may start trading ES all the time. You don't make as much money. I mean, you can put as much size on with ES as you want, but you make $5 a point, but you may only get 40, 50 points of movement versus $20 a point for 100 points of movement over here. But it's a lot more tame. I'm old. I might just have to start trading this sucker all the time. I just wanted to show you what got me into that trade. Now, I'm going to go to a higher time frame chart, and let's just see what we got here. I'm going to put a 30-minute. Okay. So, ES. There was a fair value gap right here. It was the first one after the Asia open. So this is actually its first presentation fair value gap. And when we wicked down here, we wicked into the Asia open. Here we wicked into the 6 o'clock open. Here's the new day open over here. So we didn't go as far down. That's indicating more upside. If you look at that, the way this chart appears, let's do a 1 minute over here, and I'm going to make it small, and just look at the difference. It's called a smart money transfer. That's or SMT. That's what ICT calls it. Where you see NQ, they're falling in line. They're pretty much doing the same thing. This one made a higher high than this one, but this one made a lower low than this one. That whole conglomeration, it went much lower. And so I was thinking, oh, it's going to go back to settlement and then maybe we'll pop. And so that's why I got into this trade where I did. And where are we going next? I don't know. If you were to draw the SMT, would be a divergence in price. Here's the low. Oh, that's the wrong line. Divergence in price here. So here would be our low, and there would be that low right there. Okay, so look at the angle of that line, and then over here We got this low and that low. See how the angles are much more different? This one's much sharper angle than this one. I don't know, this one looks like about a straight 45 and this one looks like about a 30-degree angle to me. That's what ICT would call SMT, smart money transfer, or smart money timing. I've heard him call it too. He doesn't really always call it the same thing. Where there's a divergence in the indexes. And you can see just looking at them, if this is the low, NQ went after it, would have had to come down here with ES, and then the lines would be the same, about 30 degrees. They're not, about right there. So this one could grow some legs. So where could we possibly trade to? I like the round number of 6,600 as our first target. If we're already trading to 200 here, we went all the way down to 100. Now we're already back up to 200. That's 100 points. So that's already $200 on one MNQ. But you had to deal with a 50-point pullback in the middle of that. 50-point pullback's $100. This one, you had to deal with this pullback. It was a decent pullback. It made me sweat a minute. That's 10 points. So that's actually $50. So $100, $100 pullback versus a $50 pullback on one contract. One micro, it would be a $50 pullback. I've got 3 on. That's not right because I was watching it and it didn't ever give me down to $50. Maybe it did. Maybe it did. But when it was right here, I was up about 200 and we just took that wick right there and then pulled back. So I'm hoping we can take a little bit of high resistance, but I'm hoping we can take this wick and possibly make it all the way to here. Now, if we look at RTH, which I got all these here that I need to move, I haven't moved them. We need to go to 4 hour. And 4 hour over here. I did mark this one. Here's our 4 hour regular trading hour high now. I think we could possibly trade it there. That would be the reasonable spot to trade to. Not that much further, just 17 points above. And so I may just go ahead and leave it there. I've already made my qualifying day. I've already made the money I wanted to make today. So this is the gravy trade. And I did make a mistake today and I didn't make money. And even in that big old rundown, I didn't even get involved. I killed my trade with a $200 profit. Got a qualifying day. Now, if I can get some bigger days like this and get my average up, so I'm not just making $200, that would be better because I'll have something I can actually withdraw when I get 5 funded days. Whatever happens with this trade, I'm not going to trade this account anymore today. But I could see it going there. This one's, is it? Oh, this is not. We need to do regular trading hours. So regular trading hours, we can get rid of this guy. Don't need it anymore. Regular trading hours is actually here. 633. Could we get there? Possibly. That's where I'm going to try for. But we wouldn't have to. We could go back to extended here, and we could just try for that most recent, or we could just try for 66. This is the high, this is a recent high right here. We took that one, we pulled back here, and then now we're here. Smaller time frame, 30 minutes. This wick right here would be a fine one to reach for, or this one, or these relative equal highs right here. That's it. 66.17, where that previous 4-hour RTH was. So maybe that's where we need to aim. I don't know. What if we take back all of yesterday's move? That would be kind of fun, wouldn't it? We may just work this weekly fair value gap, and that's all we want. We halted at the center and pulled back 50 points. And now we're just staying there. So let's look at the RTH 4-hour over here. I still got all my lines from before. Now we still have this monthly low and this monthly low and a weekly fair value gap down here. We could possibly trade to. I think this is where we're headed by the end of this month. Possibly into this guy. May start tomorrow, but I think that's where we're headed. Because how can we have a Santa Claus rally without a pullback? And we usually get a Santa Claus rally. The seasonal tendency is south during this month. Actually, it starts in October, but we didn't start in October. We just kept going up in October. Okay, so let's mark out our 4-hour highs and lows for the RTH. We got that one down here, and we already went to it. I think I got it on there pretty close. All this other stuff on here. Can't hardly see it. There we go. So we got that one. We may not get any higher than that. So we have been ranging right here quite a bit. And that may be all we want to do is range there. And that would correspond with it working this fair value gap right here. This is a weekly fair value gap. I would like to see it go back up. We've worked it hard already. All of this was in it. The equivalent of it being in it. There's not one on ES. There's not a fair value gap. There is this 4-hour, but we've already painted it too. So, I don't know. I'd like to see it continue going up. So there's the 4-hour. Mucho importante. That's where we look for our reversals. We blew through a bunch of them today. If you were looking for reversals there, like I was, you lost each time you tried. There was only one that actually validated to the upside, and it was this one. We went on a 300-point run to the top. Oh no, it wasn't that one. We would have to go to a smaller time frame to see it. But yeah, I was in up here, 1,200 points. I killed it at $200. So that's our 4-hour RTH high, and I don't think we're reaching all the way up here again. So I'm not even going to mark any of those. Settlement Wednesday could be a deal. New day opening gap I can leave. The low of the week also could be a point where we would bounce off of. This is last week's low, and we were kind of using it as resistance for a while there. I don't know that we'll get that high up. So let's go to extended over here, and let's see where we could possibly trade to here. This one actually occurred at 2 p.m., so this would actually be the afternoon high right there, 402. I could see this going there. But in this one, we took that high, and that's when we pulled back. So we may not want to go back there. Let's go a smaller time frame than that. Let's do a 30-minute. We did take these highs, barely. We may just be ranging here. We go up, maybe we try to take them again, fail. We stopped right there. Went to 200, now we're going back to 80. That's pretty common rotation. 200 to 80, and then up to 20, back to 200, back to 80. That's very common rotation for NQ. I trade MNQ and ES, but MNQ has been so crazy, I'm trading ES right now. I'm trying to keep from getting a 50-point candle up the ass tonight. Spence. From this fair value gap perspective, this candle is really, really close to filling it in. So that may be the high of the night. It's definitely the high of the Asia session. Let's look at that. Make sure I get in the right spot, because if it left a little open, we could definitely revisit. Yeah, it left a little open. Just a tiny bit open. Almost to 250. That would make more sense if we fill that in. So we're down to 80 again. This one's doing okay. Well, Spence, subscribe to it. I have been a struggling trader for 2.5 years, or 2 years rather. Since I found Top Step, it's been November was my 2-year anniversary, and I teach ICT concepts. One of his concepts based on fair value gaps, 4-hour regular trading hour highs and lows, and I've gone from being struggling just like everybody else to I've had 2 payouts now, and I've got 3 accounts funded. I just changed all my strategy up to where I'm just trying for $200 days. And if you do $200 days with 5 of these express funded accounts, you can do what's 1 micro, and you can make $100 with either of these products. And so you can make $200 rather, $200 a day. That's $1,000 a week times 5. That's 5,000 a week, 20 grand a month, just making $200 a day. So that's my goal right now. Keep my risk very, very small and try to get at least $200. It doesn't have to be $200 a day. Like today, I lost $300. Don't ask why. I should not have lost $300. I was actually down $400 when I started, and then I made $200. I killed it on this move down when we got to pre-market low, and then I didn't want to join the move back because I've been getting smoked so much on trying to join moves in progress. So I just left it. I did not try to catch any of that down move, or the majority of it I missed. 100 points out of 1,200 I caught. And so yesterday ended up being a loser because I tried to take a few of the reversals and then they failed. But that was a 300 point run up right here. So I mean, you could have grabbed some of that too, or even reversed here, but I was just like, no, I'm not touching it, shut it down. Didn't take any more trades after my 2 losers. So had 1 winner, 2 losers, gave it up for the day. Concepts are real simple. When we take a 4-hour regular trading hour high or low, we look for a reversal pattern. If you go to my channel, let's see if I can find, I'll just show you real quick. If you go to my channel, it's going to start playing, but I'm interested in going to the channel here. You go to my channel right there, and you go to playlists and look at these reversal pattern videos right here. It'll teach you what we're looking for on each one of these. Okay, I'm not gonna.
Hey folks, I wanted to talk to you about today's reversal pattern. We had quite a
so it's just real simple.
Dive down. For some reason, we don't want to take these lows. We just keep creating more of them. There will be a target at some point. So we opened and just went straight down, and then we kind of got into this big consolidation garbage. Now,
I'm not going to let that play,
talk to you about
but I always listen to him every time. Yeah, I'm not going to let it play. But go there, Spence. Look at those reversal patterns. The concept behind this is price is not controlled. This is ICT stuff, and he's very famous. If you don't know who he is, his name is Michael Huddleston. His YouTube handle is Inner Circle Trader, the Inner Circle Trader, and this is all his stuff. But he says that the market is not controlled by buying and selling pressure. It's actually controlled by a computer delivering price, and that computer puts out a very distinct signature when it's about to reverse. And that signature is what the big money guys look for to change their position. So, and if you look at those videos, you can see that that signature happens. It doesn't always look exactly the same, but the same components are there. Each time it reverses, and the most likely reversal spots are at these 4 hour regular trading hour. Why 4 hour? Because this would be a New York session high, like morning high or afternoon high, or morning low, afternoon low, and that's when most of the volume occurs. So if you put a daily candle on there, it may not recognize this, and it will go up and it'll take that high and leave the daily high alone and then fall out of bed. So we use the 4 hour regular trading hour as our levels of possible reversal, and then when it takes one of them, we just watch for it. And this one here on ES, this is a monthly and a weekly low. I had it marked out on here for a month, so we're going there, get ready for it, and then we put up our little reversal pattern here, and I can show that to you. This trade is continuing to work against me here. I might have to get out of it. It doesn't appear to want to go any higher. We stopped right there. This is a balanced range, so if it doesn't stop here, then we're in trouble. But yeah, I'll show you this real quick while we're here. Okay, so this is the pattern. Okay, so we go down and we take out a significant level on this. In this case, it's this weekly, monthly, and we mark the last up close candle before the run down right here, and this would be our breaker, our bullish breaker. You can mark the high and the low if you want to. Not much of a candle. And so once we poked this low, then we started trading higher, and we created a fair value gap right here above the breaker. That's important. This fair value gap right here is really important. And then after that, we want to make sure it's respected. So if we have a push down and it doesn't fill this in, that's our signal to go long. And so you could go on. I went long there right above settlement, and I didn't know where I was aiming, so I was just taking little scalps. I was just doing like, okay, there's 50 bucks. The first one I think got me $100, and then I added 50 more, and then, you know, until I got up to 287, and now I'm adding to that there. And the reason I got into this trade is because we wicked down to that Asia open, and then Asia had a fair value gap that's the first presentation fair value gap for Asia, and so I jumped into that here. I'm not crazy about the PD array we're seeing right now, because we did take this high and we're having a difficult time getting back above it. When I said this is a balanced range, this right here, we had candle go down and straight back up. That's a balanced range. That's called an immediate rebalance, and that's an indication that the price doesn't want to go lower than this area. So if it does like get lower than this area, then that's something that I should probably take this trade off. And we NQ, sometimes it works off of NQ and sometimes it works off of ES as far as this algorithm. They both have their own. But so NQ traded once again back down all the way to 50 from all the way up here at 208. That 50-point rip, that's a $100 bill. That's why I've quit trading this, because I keep getting stopped out. I'll be up $200 and all of a sudden I'm stopped out at break even, and it's pissing me off. So this balanced range here, what you can do with it, I use a fib tool, but I don't use fib numbers. I'm just going to do just this lower portion of it, and it's just quadrants: 25, 50, 75, just 25% quadrants. And we want this halfway point right here to be respected. You could do the entire set of candles there if you wanted to, but I'm mainly interested in both of these candle bodies here. I guess I could do it up to there and to right there maybe, but these are dead equal lows. So taking those out and working into this fair value gap is also quite possible. There's a volume imbalance there. I don't know. I'm thinking we're taking it out, and so I don't want to lose my P&L that I got right now. I could get out here and get back in if it shows a reversal sign there, and that'd be just fine. I lock in my money, so I'm going to do that right now, and now I'm going to watch volume imbalance, volume imbalance, volume imbalance. That all was a push to the upside, very aggressive. We're clearly reversing from here. If you use that as a reversal pattern, even though it's not at a 4-hour high or low, we fair value gapped, respected it, and now we're trading lower. And you could just get in there on that push up there and just aim for those two lows and grab yourself, 5-10 points, whatever it is. On NQ it would be a lot more points. That's the basis behind it. The last down close candle before the run up and the last up close candle before the run down. So that would be this would be a bearish breaker. Fair value gap, reached up, now we're coming down. If I would have killed this a lot earlier, I could have got $180 when I saw that. That's actually my get out of this trade signal is a reversal pattern validating, breaker validating to the downside is my signal to get out. And so I should have, if I was paying more attention, I would have gotten out there and I would have made $100 more on that trade. But that's the dangers of live streaming and trading at the same time. Sometimes you miss some key signals that you shouldn't miss. I was probably looking at my YouTube channel when that happened. But these volume imbalances are often traded back down to. So if you're still in the frame of mind that we're going to be bullish for the evening, it would come and take these, possibly all of them out, and then leave these lows and go back up. Maybe it respects one of them. I don't know. That's pretty aggressive move to the downside there. NQ is just really ripping lower over here. It may go all the way back to settlement. Look at the size of that candle. This green candle right here. 78 points. In the time frame here, that's a 30-minute candle. This one's even bigger than that. Yeah, we are ripping lower. We may revisit the lows. We may make a new low of the day. 84 points on that one. So this is the volume imbalance where I was thinking it might reverse right there. Let's see what happens. I'm not going to trade it, but I'm going to pay attention to it. Volume imbalance is where two candles, there's a gap between the candles. There's only wicks in between. The price will often go down because that's just a gap in price action. If somebody has an order right there in that gap, it's going to go down and fill it. And from the computer will offer down to it. So this is the volume imbalance right here. Let's see how these wicks came to it, and let's see if it reverses here, because now we have one to the upside right there. We may not reverse here. We may continue down. That's an aggressive move down. I will say this, algorithmic price action since the government shutdown has been real muddy. We've only had a couple of days a week where we've seen algorithmic price delivery, in my opinion. There were some days where you could mark out a reversal pattern, and some days you just absolutely, you could find them, but they were difficult to see. This week, we've seen some good patterns already. That one this morning, beautiful. I'm not in a trade now, so I'll show it to you. I actually got into the one in ES. We had one in Asia session a couple of days ago that was absolutely perfect. So this one, I was working off of the signals over here because we had a fair value gap to the upside way over here. I mean, this is a bearish fair value gap, and we wicked into it. There's a 4-hour regular trading hour high there. We hit it twice, and then we put up a reversal pattern here and over here. So this is the first fair value gap of the day, and I can just put on RTH so we don't even see the rest of that stuff. There we go. Now I got to get back to it. It is so far away. There we go. There it is. Okay. So we opened here, went up there, made the opening range high, then we came up and we poked that opening range high, while we were also poking into this fair value gap on NQ. And so I wanted both of them to match, both of them to say we're going down. This is our breaker on it. Our last down close candle before the run up. That's it. We took out the opening range high, kind of hung out, consolidated for a minute, and then we pushed through that breaker with a fair value gap right there. I was looking at the first presentation fair value gap. Oh man, I just moved it as my reversal point and my entry point. I wanted to trade through it and reverse it, invert that sucker. And so we did, and we put up a fair value gap here, and I entered right there. This green candle got me in the trade. And then I ended up killing the trade at pre-market low, which was somewhere around here. Because normally we'll reverse there and go back up, but we didn't today. So that's what it looked like over here. On NQ, we can look at the same stuff. And that's all, that is a computer delivering that stuff. That is not, oh, everybody in the world is selling all of their stocks. No. NVIDIA reported good earnings. Why would anybody sell? So same kind of a deal. Poked, opening range high, fiddled around. The last down close candle before the run up, pushed through with a fair value gap. Its first presentation fair value gap was very small, but we pushed through it, inverted it. That's your entry for the downside. And you could have held it all day long and made millions of dollars. That's a computer delivering price right there, and that's exactly what I look for. Haven't seen it since the government shut down, but today we had government news. Everything's back. I didn't have any government news for a long time. And during that time, I would call it, that ICT calls it manual manipulation. And I think that's what we were seeing. We were seeing 1 hour ranges where price would just rip down, rip straight back up, rip down, rip straight back up. No structure to it at all. And now we have structure again. That delivery that we saw was an algorithm as well, but it was just set to perform a whole lot different than what I'm used to seeing. And so I would think, oh, we're going to break this range, we're going to go down, and we wouldn't. We'd go straight back up. That was a very difficult trading time for me because I'm a reversal trader, and we had a lot of directional days where we just didn't get a reversal. We would rip down like this, and then we would just stop and consolidate for the rest of the day. This little, I think this was the only reversal close to that we had today. And if you look at that, the thing that this is the low, and then these are pretty much equal lows, so that would have to be our breaker. And you don't really, there's one tiny little fair value gap there, and you don't really get an opportunity to enter because we didn't poke into it. And then we didn't take the high, we took that high, but we left that high. But that's a 300 point run up over here on NQ. It's not that far on this one. But that would have been an excellent opportunity to get in for more downside. I just didn't do it. I didn't take it because it wasn't taking that high. If I was going to get in, it needed to take that high or go back to settlement. Wouldn't do it. It wouldn't do what I wanted it to do, so I wasn't going to trade it. If you got in all this mess, you can just destroy your P&L immediately. So that's what we worked with. That's what we worked with last night. It looks like we did bounce at that volume imbalance, and that's good. That's what I want to see. I want to see price delivering in a repeatable pattern way. And we're pulling away with a fair value gap. So I'm going to put 3 more on. We came down, we made a higher low, consolidated, filled in this volume imbalance. Here's our fair value gap right here. It isn't actually there yet, so I'm going to pull it back. This candle has to finish and leave this portion open. So we still have 13 seconds on that candle. It may not be a fair value gap. We may still have more downside. Let's see what NQ is doing in that same area. Man, there's so much movement, it takes a mile of clicking to get there. All right, there it is. That's actually what I wanted to see right there. I want to see it stay open. I'm going to go ahead and try right there. If we'll poke it. That might have been all I wanted. Let's see what NQ is doing in that same little situation. All right, we're filled. Might get smoked here. All right, so came down, swept. We're really not working off of this fair value gap so much as the previous one, but I want to see where we pulled back to on this run down right here. There's 3 fair value gaps here. There's a small one right there. That's the only one where we had a down close candle right there, and we kind of pulled back to it. I think it's actually dead even with it. Didn't even take it out, which is kind of concerning. One green candle in a sea, one red candle in a sea of green. That's where we pulled back to right there, and we did take out the low just by a tick, and then we reversed, and that corresponded well with the volume imbalance here. So this may be that we go back up to that high. Maybe I get smoked. But I want to know why we didn't go lower than that volume imbalance right there. If I'm right, it's because the computer didn't want it to go lower than that. It was told to go right to there and then offer higher. We'll see how it pans out. The move up is not aggressive. Usually when we take that fair value gap, we should see a decent pop up. Yeah, that's what I was worried about. And this should have been respected right here too, but it wasn't. Usually when you do see that and it wicks into a fair value gap, you should see the next candle make a new high, and we didn't. It doesn't mean this one could. This one could still respect this fair value gap because we opened above it. And we can finish way up here. The wicks do the damage, but the bodies tell the narrative. Look at the bodies. Bodies higher, 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 still higher, So where we open is right at that base. We could finish at the moon on this candle. We could finish, look at what NQ's doing. We could finish 20 points higher on this candle. Okay, so that body was still respecting the fair value gap. Wick did the damage. Body still respecting. You have to include the volume imbalance over here on this fair value gap. It doesn't mean it's going to continue, but it might. We'll see. This one opened right at the halfway point. Let's see where it finishes. It's a nerve-wracking part because it looks like you're about to get your butt handed to you, but you got to hold it. I'm going to zoom in on that so you can see what a fair value gap is there. So fair value gap is where you have a green candle pushing through and the wicks do not overlap. So this top of this candle here, bottom of this candle here, there's only green in this portion. That's a fair value gap. This one would be a buy side inefficiency, busy. Yeah. Buy side imbalance, sell side inefficiency. So this one actually did close below the fair value gap and open below the fair value gap. So to me, that means we're in a range here or could possibly offer lower, and I'm not interested in this trade anymore, so I'm going to kill it. We may still go up, but that is what gets me in the trade and gets me out of the trade. If it respects it, we're good, but this one opened below it, so we're not good. Still could go up, it's just not what I like to see. We may take this low and go up, but we could possibly offer a whole lot lower. So yeah, I'm done with that. It's no longer valid. It's out. And it's just that simple. Once you learn how to spot all this stuff in real time, man, you can make some money, buddy. You can make some money. I think that's going to be it for me, guys. I just wanted to do a little pajama trade. Didn't make a lot of money. I added, I don't know, I was at 287. I added a little bit, lost a little bit on that last one. But money's money. I'll take it. I'll take it. My total is not good. I've just been getting $200 days here and there, but I will build that up. I'll have a day like today where I should have held that trade. I've just got market PTSD from getting spanked too much, and so I had this account down to $18 on Monday. 18 freaking dollars. Not because I was trading my system, it was because I was trading desperately, just trying to catch a trade anywhere. And that's exactly why I did not take any of this down move, because I was trying to join while the thing was in progress and getting my butt handed to me. I'd get in and they get wicked out. Get in, get wicked out. Do that 10 times at $50, that's $500 you lost in a day. If you do it with a bigger size, there's a whole lot more you lost in a day. And so, even though this was screaming down, I didn't get involved in any trades. This one I got involved in, killed it at pre-market low, and I left all that alone all day long. I did try one reversal pattern somewhere around settlement right here, and I lost it too. So that was it for me. I didn't take any more after that. But yeah, this could still go up. We just swept that low again. Could still go up. But I'm not going to trade any more of it tonight. I'm going to wait till tomorrow. It's real easy to blow them up with it when you're putting up 100-point candles, 1-minute candles, 80-point 1-minute candles. You can blow up an account in the blink of an eye, even with micros. Even with micros, you can. And so that's why I traded ES today. And if you do 2 ES today, the price movement, it would have required 4 ES to 1 NQ to match the dollar amount. But it's a lot more tame. You're not going to get 100-point rips. It'll be a lot easier for you if you do this. And the signals are usually the same. ES has actually been putting up better signals than NQ because of all of its crazy swings. NQ has always been crazy, but it's extra crazy right now. So, I don't know. Hope that helps. Spence, here's a story for you. When I started trading 2 years ago rather, with Top Step, I did a little bit of my own money before that and lost it all. So that's why I say 2.5. Probably closer to 3, really. Pretty much straight loser until I heard a video, ICT. He was talking about how people were stealing his concepts, passing them off as their own. And so he was giving all of his information away for free. Never heard of him before in my life. And I looked him up. In the futures trading space, it's not very common for people to have a lot of subscribers because just a lot of people don't do it. This guy's got over 1 million subscribers. And I'm like, wow, he must know something. So I started watching his videos. 3 months later, I got funded for the first time. And that was July of 2024. And then I went through a period where I didn't get a payout. I went through a period where I was struggling to get funded again. I go back and watch his videos. Then he did some live streaming. I copy traded him. And it's a 6-second delay, so you can miss the whole move if you're not careful. And I got funded again in September. Blew it up, of course. And then in November, blew it up again. I went back, watched some of those videos, and I heard him say, if you can't draw out your entry signal on a piece of paper or on a napkin at a bar to show somebody what is making you enter that trade, what are you seeing that's making you enter this trade? If you can't do that, then you don't have a trading plan. And I was like, okay, so I'm going to see if I can draw out my trading plan. And I didn't have one. And so I went back and watched his videos, watched Tanya Trades. She talks about the breakers and all. And so I really started just dissecting the chart each time when we reversed, what was the key elements and all of this. And I figured out what he was talking about and the algorithmic signature that he mentions. And from that point forward, that was in May. That's my real turning point when I started really seeing them in real time. I started getting funded regularly, still blowing up accounts, but I got funded, blew up the account, funded, got day 4, blew up the account, funded again. Since May, 20 times I've been funded, and some of them I got payout, some of them didn't, but ultimately blew up the account. And so when I got this one, I said, I've got to figure out a way to stop blowing up accounts. Pros don't blow up their accounts every week and buy a new one. They don't. They build their account and they keep it active and they use it as their cash cow. And I want to be a pro, so I said I'm going to size down and I'm just going to go for those $200 a day. If I do that, $200 a day, if didn't hear that example earlier, $200 a day average on one account will produce $4,000 a month. Top Step allows you to have 5. That's $20,000 a month on $200 a day. You don't need $2,000 days trading max size with a $2,000 drawdown account. You'll blow up your account every time. So my plan to not blow up my account is to trade 1 micro until this account, after my payout and everything, gets to $4,000. On an NQ it's 1. Over here it's 2. But I can do as many as 3 if the conditions look right. Like if this one's moving 50-point candles and this one's moving a 10-point candle, I can do it. I will do 3 on that. But size down, very small. And when I have a good day and a good reversal pattern, I make my $200. I need a good winning day. I mean, I can show you this combine right here. It's the one I call my baby because it's the one. It's the one. I already got a payout on it once, but you can see I started it way back on October 7th. Okay, first week, real good. Next week, dang near blew it up. Over leveraged. I said, I I can just go ahead and put on a big contract. It's not going to hurt anything. Nearly blew it up. I nearly blew it up. Got it down to like 600 bucks. Got back on track. I said, nope, you're going to trade properly. This is trading. I think I was actually saying I'd do 4 micros with a $200 stop loss, but that was 10% of the account. So I broke it down. 1 micro, $50 stop loss is 2.5% of the account. I'd have to be wrong a hell of a lot of times to blow up my account doing that. So I sized down. I still was over trading, but had a good day here. In and out, 86 trades. That's crazy that I traded that many times and still made money. But that was a good day. But if you look here, qualifying day, qualifying day, qualifying day, not. But this is a qualifying day, and this is a qualifying day. So I was qualified for a payout, but I didn't take it. I had $2,000 in my account at that time. I didn't take it. And then I went into loser. Finally got me another day. And this was not trading my system. This was gamble trading, strategy hopping, range trading, all of that. Fast forward to the month of November. Got some more good days. This is with micros, $1,600 day, $1,300 day. Had a $2,200 week, and I did take a payout there. Now we're down, and I've got $1,100, or I had $1,800 starting the week. And look at that. Boom, 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 boom. Straight losing days. If you're trading big size, when you get into a situation like this, you're going to blow your account. Next week. This is the week we're in now. So this is payout week. I've had 1 qualifying day, 2 qualifying days, 3, 4. That's today. Yesterday was a 1 more, and I'm qualified for a payout. And I get one of these days, I'm taking that sucker. But look at that, man. For 8 weeks. I think this is my 8th week. October 7 to the 21st. There's 1, 2, 3, 4, 5, 6, 7. 7 weeks. Because I think this is the first week of November. Yeah, it is. 7 weeks I've been keeping this thing active with that strategy. And that's my goal. Don't blow it up. Got it down to 18 freaking dollars. I don't even know how. It was during this time right here. During this week. I didn't even trade it Friday because I couldn't bear the thought of blowing it up. Caught a good reversal pattern here. No drawdown, maybe $10 drawdown. Dug myself out of the hole. And then right back up to where we are now. I'll get one of these days. I guarantee you I will get one of these days. And then I'll get another payout. And the one I'm copying on here, it looks pretty close to that too. Let's see. So I had loser since from the day I opened it. Loser. Finally got a qualifying day. Loser. $200 max loss limit here. Changed the max loss limit, lost 321. But 1, 2, 3, 4 qualifying days. 1 more, I get a payout. 1 good day where like today, if I would have held that, today I would have made well over $2,000 on that little setup I had. That's a good day. I got my qualifying days. I can take a payout that day. Send me $1,000 bucks. Why not? So size down, trade those micros. If you're going to trade MNQ, you can make a crap ton of money on micros. Just do 1. Keep your loss small. You could do 1 with $100 stop loss even. That's 5% of your account. And if you learn to spot these reversal patterns, you can make a ton of money because a lot of times it'll hit those and rip up 300 points. That's $600 on 1 micro. Once you get your account up to 20 grand, and if you want to put on 5 micros or a mini or whatever, you can handle it. But you don't want to have more than that 2.5 to 5% stop loss. That's the key to not blowing up your account, is controlling your losses. Did price action ever do anything different, or are we just consolidating? Yeah, we're happy here. We're happy here. So I'm not going to take any more trades, but I hope y'all learned something about price action trading, because that's what this is all about. Price action trading. Learning to read. Every little candle's telling you a tale. Every one of them. This trade, actually, if I would have held it, I would have got back in profit, and I could have killed it for a couple of dollars, because this is my entry here, and we did go above it one more time. But you don't know that at the time. It's best just to get out, kill your losers quick. This one, drawdown from the very first day, and I got one in peril. Black Betty is in peril. She's down 1938. So I don't have very far to go before I hit my max loss limit. I'm hoping that I can dig her out of the hole. I'm not going to trade it until I see an absolute perfect setup. And we're starting to see them again, so I think I'll get there. But let's look at her stats. I've only had, last Monday I got her going, had one qualifying day. Everything else straight losses. I have not been trade copying this one, except for yesterday. That's where I started yesterday during Asia. And that's what got her in the shape she's in. But straight losses every day. A lot of the reason is I wasn't trade copying, and so I would take a trade on the other account, and then I'd come over here and try to join the move in progress, get smoked. So I'm not going to do that. If I'm going to trade this account, I will focus only on it and try to get even $50 to the good here. Would be fine with me until I get it built back up to where I can hold the trade with confidence, because she's about to go away, and I can't have that. I got to get 5 of these things running. I can't be blowing up accounts. I blew up my combine one day. I was at 52,600. Almost got to get it funded. Full mini on, and it ripped against me 150 points. I was actually trading another deal. Didn't even have a stop loss in. Blew my account in one day. I'd worked on that thing for a couple of days already, 3 or 4 days. And so it just taught me, man, you can put that big size on all you want, but you're just going to be blowing up accounts. You may do great for a while, but eventually it's going to bite you in the butt. And we're not in the business of blowing up accounts. We're in the business of making money. Catch you on the next one. Thanks. Yes, sir, Spence. I got to go too. Thanks for watching. I'll be on. I don't know if I'm going to do it tomorrow. I've got some errands I need to run. I think I'm going to call it for the night on this one. I'm going to just lock out for the day. I do not want to lose this qualifying day. There may be some potential tomorrow, but typically on a day where we've had a big move like that, you'll just chop like this the rest of the day. On Friday, it'll just be like this. And so I don't want to be involved in that. Certainly not something I would get Black Betty involved in. I've already reached my daily goal, so I think I'm probably going to be locking it out for the day. Unless I see something miraculous, I'm not going to mess with it. The likelihood is that we would offer higher tomorrow, just because we took out this significant level and we don't usually extend the weekly range, but there's no telling what we're going to do. So I don't want to deal with ambiguity. I'm just going to lock out. In fact, I don't know. If I see a beautiful signal tomorrow, I might take one trade, $50 stop loss, and just see what happens. But that's the only way I would trade. And we most likely, this needs to be revisited. If we hit it, put up a reversal pattern, and maybe went aiming for this guy, that'd be okay. I'd do that. Or if we took this one first, put up a reversal pattern, and started heading down here, I would also be interested in that. But those are the only 2 places I would be looking for a trade. Maybe even that high there. So but I don't expect it to do a whole lot. I expect it to chop, maybe just chop in between those two levels. But yeah, I've got to go to bed. I've been staying up too late burning the midnight oil, so I really appreciate y'all watching. If I do get on tomorrow, I'll see you tomorrow. But I'm not 100% sure I'm going to be trading tomorrow. So talk to y'all later.